It being 11 o'clock, welcome to the Audit Committee and welcome in attendance Kelly Parry for the first time. Proceed to the business. We have apologies from Councillor Baxter and Councillor Milligan, which means if any of you leave the room, we won't be quorate. Be warned. From time to time I mention what I've been doing between the last Audit Committee and this one. We had quite a big gap. Last meeting was in June, and as you know, we're moving to a reduced number of Audit Committee meetings. The last one for this year will be on the 8th of December. And the dates for the future ones you should have on the internal calendar. I had two meetings, one with Gary Fairley discussing forecasting accuracy and timeliness for the long-term financial position of the Council, a subject that likely we will discuss more later on. I also attended in my personal capacity the Commission for Local Government Taxation Review, at which the former Auditor General Bob Black spoke. Order of business. Are we content? Declarations of interest. There being none, could we move to the minutes of the meeting of the 16th of June? Are we content as to factual record? Can we move to matters arising? There being none, I consider these ready for signature. Now move to item 5. This is the annual audit findings by Grant Thornton, pages 11 to 57 of the report. You will also have this document relating to them. Could Grant Thornton, Grace, there you are, speak to the report.
Good morning, and first of all, I'm really sorry about how this is printed out. The colour obviously didn't come out very well, so if you would like a separate copy of that, then I'll be very happy to print them out and send them individually.
Could I interject? I know Councillor Baxter's not here, but he might have a view that as a cost-saving council, perhaps less of this expensive ink is required for the likes of us. But that may conflict with the Grant Thornton House style.
Yes. I have offered that we should just send them in as we print them, but anyway.
Chair, can I suggest we get it via email? That might solve the problem.
And I guess that one of the key things to say is that it is a really different structure to the report that you usually get at this time of year, because we have tried to both fulfil our responsibilities under the international standards of auditing and our responsibilities under the wider Audit Scotland Code of Audit Practice in this report. I think what happened in previous years is we did the report on the financial statements at this time of year, and then by December reported on the kind of wider annual report, and I guess we just felt that was a bit late to be reporting on the year end as the 31st of March. So hopefully this is a welcome change, but I really value any feedback for future years. We outline our responsibilities on page 17 of this report, which is to cover the financial statements, corporate governance and best value and performance. And initially I'll talk about the financial statements. So later today we intend to issue an unqualified audit opinion on the financial statements, and you'll see there that we've also certified some grant claims during the year with no problems. During the audit, we identified 3 adjustments which changed the value of the balance sheet, increased the value of the balance sheet by £18 million. And on Appendix 2, which is on page 50, we identified 2 further adjustments that we agreed with management would not be adjusted. And during the audit, we identified a number of disclosure improvements in the accounts which have been reflected within the final draft of the financial statements. And I guess that overall, for those of you who remember these equivalent reports in prior years, then this was a significant improvement, both in the quality of the draft accounts document, but also in the underlying financial accounting work. So a good report from us in that regard. On pages 21 and 22, we outline the work that we've completed to gain assurance on the significant and reasonably possible risks. If you remember from the audit plan, we rebutted the risk around about revenue, the risk of revenue fraud, but we outline within our work there about the work that we did to confirm that, and a lot of our work around about journal entries. The other areas of risk that we identified specifically within the audit plan related to operating expenses, payroll, the payment of welfare expenditure, so really housing benefits and housing revenue. On page 25 of the report, we talk about one of the key elements of the audit this year, which was the housing revaluation exercise. I don't know if you remember last year there were a number of adjustments relating to the valuation of housing, and this year the Council's in-house valuer completed a full revaluation of the housing stock using the Beacon methodology, which is the methodology that all councils use to revalue their stock. And they used 200 beacons, which are basically an example of different types of property across the council. And so quite a significant part of our work was about verifying the process that they used and the figures that they came up with. And as a result of that exercise, the value of housing carried within the council's balance sheet fell from around about 315 million to 278 million. On page 26, just to highlight, we outline some of the key risks ahead for the finance team over the next year. Again, these principally relate to valuation. So the first one is on fair value measurement of surplus assets, but more significantly is accounting for infrastructure assets. In the past, all the roads, carriageways, cycle tracks, things like that have been measured at historic cost. But over the next year or two, the council are going to have to move on to valuing that at depreciated replacement cost, which will increase the value of the balance sheet by quite a significant amount, and will require quite a lot of work by the finance team behind the scenes to make that happen. On financial management, which is in the next section on page 27, we report that the council again delivered a significant underspend of £3.2 million against the revenue budget. And we reflect there that progress has been made on delivering the business transformation savings, although as a result, I think mainly of timing, the actual savings were just under £1 million against plans for £1.8 million. And I guess the key thing to say is that as a result of the underspend, the council was able to increase the level of uncommitted reserves to £12.8 million, which is equivalent to about 8.5% of expenditure. Finally, on page 32, we talk there about the finance team. Audit Scotland asked us to complete page 32. On the finance team, Audit Scotland this year asked us to complete a questionnaire based on financial capacity, which I think was coming from their view across the sector, where they see finance teams being cut as a result of the savings being delivered, and therefore seeing an increase in the level of errors and the level of problems with the accounts, and I guess the status of finance. And so we reviewed it at this council, and as I said earlier, we've actually noticed an improvement in the quality of finance at the council rather than any problems that reflecting what Audit Scotland have been talking about. And we're also confident with the status of finance within the council. The next section I'll hand over to Paul.
Thank you, Grace. The rest of the report, Grace has obviously covered what we're required to do in terms of financial statements, and the rest of the report really reflects the work we're required to do under our responsibilities to Audit Scotland and the Code. And in terms of financial sustainability, which sort of kicks off on page 34, obviously we look at the Council's long-term financial planning and arrangements. And on page 35, we've done a sort of comparison, which is required for all councils against Audit Scotland's good practice characteristics for financial strategy. And generally speaking, that's a satisfactory position. Some more work on scenario planning and financial risk planning, I think we suggested needs to be done. But I mean, this is all within a context, of course, of the council having a very sound level of general fund reserves, and obviously a plan to address the financial challenges that are coming forward. So that I think gives you a feel that in overall terms, the financial strategy is looking reasonably good compared to Audit Scotland's requirements. The next page, 36, again, we're looking at sort of funding gaps and comparisons with others, and again, you'll see that Midlothian is not in a particularly poor position in terms of funding gaps. Certainly some of the other councils at the far left of that position are obviously got some bigger challenges. We then reflect on, obviously members were fully aware of this, the economy and some of the big issues that you're dealing with in terms of opportunities such as borders, railway, city deals, regeneration of Dalkeith Town Centre. So a number of things that are happening, all of which are both positive in the sense in terms of the local community and the economy. Obviously, financially, councils need to be able to generate income and grow council tax base, accept business rates. So clearly, lots of things happening and moving in broadly the right direction. The other next topic we need to obviously look at is governance. Governance is a key part of the audit requirement. And obviously we looked at the annual governance statement, and I think probably one of the things that review of the governance statement reflected was the need to include some additional disclosures around the council's new responsibility in respect of integrated health, and obviously the commentary on the new buyers incidents. And we've actually reflected, because we thought it was an important thing from an audit perspective to demonstrate the timelines. So on page 42, we've reflected the timelines and the actions as we've understood in terms of the council taking actions as appropriate. So what we're trying to do here is just demonstrate the sort of governance audit trail in terms of how the council's dealt with new buyers. Moving on to the best value section 4. Again, we look here at some of the key aspects of the council's operations, the single Midlothian plan, the community engagement, progress against performance indicators. I know we've got a paper on performance indicators later in the agenda. And again, generally speaking, a positive direction of travel with no particular points that I'd want to draw out to you. And I guess finally on page 48, just flagging up health and social care integration, and we have had discussions with the council. We're obviously at early days in terms of this agenda item. I think the positive perspective, I think, from looking at that you compared to some others, is that I think the relationships are quite good with health, and I think that's going to be crucial in taking this agenda forward. And I think although it's early days, the discussions we've had demonstrate some very positive signs in terms of making health and social care integration effective. The rest of the report, Grace reflected on the unadjusted differences in Appendix A. Appendix B covers and C really cover both the action plan from this year's work and the follow-up of last year's, and clearly that's something we'll be very keen to update the committee on in due course in terms of progress. So that's all I wanted to say, and we're happy to take any questions. Thank you.
Thank you very much for that. This is obviously a report that, apart from being addressed to the members, also is addressed to the Controller of Audit and is in the public domain. What reaction do you think we will have from the Controller of Audit, considering us relative to other Scottish local authorities?
I think that, to be honest, the answer about that came earlier in the year when we had the shared risk assessment exercise, where there is a local area network of all the scrutiny partners who are involved with Midlothian Council. And in prior years, that plan has come out of areas of specific scrutiny. This year, there was no area of additional scrutiny required, so the scrutiny bodies will do their normal course of work, but nothing over and above that. Which again I felt was quite a positive move for the council. And Audit Scotland are one of the key members of that local area network and tend to chair the local area network process. So I think that they are feeling quite comfortable with where Midlothian are just now.
So both the content marks an improvement from the past, and also the audit process this year was much smoother than the prior year. Councillor Bryant.
Thank you, Chair. Very pleased about the increase in reserves and the savings made by Business Transformation Steering Group. If I could have some clarity there on page 22, Grace. If you could explain what that bit at the bottom means. Reasonably possible risk.
The reasonably possible risk. So that's audit speak, really bad audit speak. But when we are drafting our plan, then we're looking for the areas of the financial statements that we think might have a material area of misstatement. So we apply the materiality, and what we're looking for are the areas where there are a large number of transactions, a large number of controls in place over these transaction cycles is what we call them. So where the activity is happening that feeds into the accounts. And so these are the 4 areas that we selected from Midlothian Council as areas of risk.
These are the known unknowns.
Yes, they're where we spend a lot of our attention. So a lot of the audit work goes into those areas. And I would have to say the significant risk. So significant risks are assumed under auditing standards. Then there's an assumption that these risks will be there in terms of management override of controls. And that's why we spent a lot of time looking at journal entries in particular. And revenue cycle, looking for fraud. So if there's any risk of fraud, then we obviously spend a lot of our audit time focusing on that.
Councillor De Wink.
Yeah, I found this document incredibly difficult to read, particularly where yellow was used. But where I got really confused is on page 36, the bar charts. You have 18.5 million from Flag Manager, and that's lower. But next to it, Argyll 24. And then at the end, you have Edinburgh 18.4, and there's a very small bar chart. What is the explanation?
Yep. So this is a paper that actually went to the...
Sorry?
This is a paper. This is from a paper.
Sorry.
This chart is from a paper that went to the Accounts Commission because the Accounts Commission were quite concerned about the level of funding gaps across councils across Scotland. And we thought it was quite interesting because it actually is quite comforting around about the position of Midlothian. I guess there are a couple of things I would say about that. So one of which is that 6 councils in Scotland haven't prepared a budget for 17-18. So 6 councils in Scotland have no idea how big the funding gap is for 17-18. The other point to note is that this chart is based on the percentage of budgeted revenue expenditure. So essentially it's looking at if you're Edinburgh and you've got a massive budget, then the challenge of meeting £18.4 million is much lower than if you're a small council like Clackmannanshire who have got similar size of budget but much less similar size of gap but much less budget. So I guess it kind of reflects the risk profile of how hard it's going to be to deliver those savings. So I guess that from my perspective, first of all, it's good news that Midlothian know what that funding gap is compared to others. And secondly, that it's actually, compared to others, it looks manageable.
Councillor Muirhead.
Yeah, the question, I'm not sure if it's to the auditors or the officers of the council, but the housing revaluation exercise, which has seen the value of the housing stock go from 315 million to 278 million. It indicates that 200 sample properties were examined and detailed inspection took place. I presume, though, that most of that reduction is due to the market values, just in the way the market is at the moment, is responsible for that, rather than deterioration in the housing stock. Is that a fair assumption to make?
I think it's accounting rules and fair value concepts as well, but perhaps Grant Thornton could explain in more detail.
Yeah, I mean, the particular issue in this particular case was how the council have accounted for components of the housing stock. The housing stock is obviously divided into different aspects that depreciate over different times, and we sort of had to reflect, or the council reflected in its financial statements, an adjustment in terms of the valuation of those components that brought the overall value down that was played out in 14-15. So in 15-16, we would anticipate we wouldn't anticipate any significant reduction in value in 15-16, and now these components have been accounted for fully and correctly in our view, then we'd expect a fairly standard position in 15-16. But what it isn't about necessarily is not about deterioration in the stock. It's about valuation and depreciation.
Well, it's the fair value accounting rules, isn't it, at play here, reflecting the fact that there is advantageous leases involved in public housing. The impact on the balance sheet has very rarely meant any change in the manner in which the council operates, and nor does it, I think, make any difference to our ability to raise debt on the markets, because there are no covenants that relate to the asset strength of the council. We do have data for the gearing ratios of all Scottish councils, but that doesn't seem to me to have any real impact on the way in which Midlothian operates. Would that be a fair comment?
Yes, Councillor. That would be. Sorry, Chair. That would be correct. Generally speaking, local authority balance sheets, because of the sort of tax raising powers that local authority has and the general sort of security of that, then balance sheet ratios don't tend to impact much in respect of ability to borrow. I mean, clearly in England, I think some lenders are starting to look at the financial sustainability of some local authorities and are perhaps getting slightly twitchy, but we haven't reached that position in Scotland as yet.
Have we further questions? Can I thank Grant Thornton very much for this report? Kenneth.
Yes, thank you, Chair. And we've had a fairly limited debate on this, but I suppose I just want to say that I'm very grateful to Grant Thornton for this report. I think the fact that it reflects on some of the issues, for example, around about the economy, some of the issues around about the challenges at new buyers is very helpful. I think it is an important report for members to pay attention to. In relation to the cumulative funding gap, I suppose my only comment would be, though our position may look relatively benign compared to a number of other councils, members would be very aware from the new financial strategy document that went to the council last week that we do face very significant financial challenges in the forthcoming period. So I think this is a positive report. I think it reflects the direction of travel that the council's been on for some time. But I certainly wouldn't want members to take away from this the idea that somehow the financial position is benign in any way, because it simply isn't.
Yes, and at the end of our papers we have from Chris Lawson the cumulative position going forward for about 5 years, so we'll come to that later, but that certainly confirms exactly what you've just said. Item 6, financial statements, 14-15, report by the Head of Finance and Integrated Service Support.
Thanks, Chair. Yeah, just following on from the Grant Thornton report, what we have in front of members of the draft accounts for the year, subject to the completion of the audit and final checks. So the actual final version will be signed after Audit Committee, and the draft is brought here today for committee's approval. I would point out there is a small typing mistake on page 14 where we've put carbon monoxide rather than carbon dioxide in some of the documents in relation to Gorebridge. A typo, but a rather important one, which from the officer's side we apologise for. That's corrected in the version of the accounts that will be signed as the day goes on. So happy to take any questions on the accounts, but it very much reflects the update you've heard from Grace and Paul.
I have a query at the bottom of page 7, probably my lack of understanding. As Councillor Muirhead mentioned, we have a down valuation of 87.847 million in our assets, mainly due to the council's housing stock. But when we then go to the paragraph non-current and current assets, you say operational and non-operational assets decrease in value by 37 million. What I'm trying to do is reconcile 87 million on one line and 37 million on the next.
I suppose the balance sheet further on in the accounts will give the movement across each of the categories of assets, and the detailed notes to the accounts will set out the movement in each of the assets and the various lines. So I'm happy to certainly sit down with any member and talk through any of the detail in the notes to the accounts. They are, I suppose, the accounts themselves are, by their nature, very technical, and they're not, local government accounts are not the easiest things to follow. So certainly any detail like that, Chair, or for any other members, happy to go through that offline, if that would help.
Okay, so the 87 million and then the 37 million are consistent one with the others, not a mistake.
I would expect them to be consistent, yes.
It's not a mistake. It's because the net assets position reflects the pension liability, which increased during the year as well. So it's not just about the long-term assets, it's also that liability too.
Okay, and these will be signed off by the officers and in the public domain by, what's the timescale?
Chair, immediately following the Audit Committee, I'll sign the accounts, and then the Leader of the Council and the Chief Executive will also sign the documents, and after that we will make arrangements to publish them once we have the signed audit certificate from Grant Thornton. The other thing I would just wanted to maybe take this chance to record in a minute is just thanks to the France team in terms of the quality of the accounts, and thanks to Grant Thornton as well for the way the audit was conducted. Just seek your indulgence to put that on record.
Thank you. Can we move on to item 7, risk management? John.
Thanks. Chair, Chris has been delayed on another matter, so I'll take the committee through this report. This is the first risk report for financial year 2015-16 and advises the committee of the key risks facing the council, and the key risks are very well known to members. Section 2 of the report details the 3 key risks we've already heard regarding balancing the budget. Change and transition remains a challenge, and the integration of health and social care, which has also been referred to in earlier contributions, features on the key risks. Turning to the detail of the critical and corporate risks, Section 3.1 outlines the budget gap facing the Council for the next 5 years and complements the words earlier from Kenneth as Chief Executive, and the financial strategy is dealt with under item 8 later on today's agenda. In terms of transformation programme, moving forward, the transformation programme will morph into delivering excellence, and the delivering excellence framework was approved at the council meeting in this chamber last Tuesday. Turning to health and social care, as outlined in section 3.3, the integration is progressing well, and the inaugural integration joint board was held last month, and in the report I've outlined the approach to risk at the bottom, or in the third bottom section on page F6. Moving forward, work is ongoing, as set in section 3.4, across all services to inform the corporate risks. And finally, the committee is invited to consider the risks, noting that the 3 key corporate risks facing the council are well known to council. If committee or chair have any questions, myself and my colleagues will endeavour to answer them. Thank you.
Okay, we seem to have a major shift here from the early days in which we tried to tackle the budget deficit issue by having the transformation group look at a number of focused individual projects for delivering savings. But now we would need to have, in order to close a growing gap in our future deficit, we need to have a cross-council sort of systemic change so that every operation we look at is subject to efficiency savings and efficiency review. Would that be a fair analysis of the change in emphasis in the Council?
Yes.
How are we mechanically going to monitor such a wide range of activities going forward so that we can be sure as a committee that we are actually achieving the savings that we need to make?
Chair, can I perhaps take that? Just firstly, harking back to your first question. I mean, this has to be more than efficiency savings. This is about a fundamental look at which services we deliver and how we deliver them, how we work in partnership with others, how we use digital to transform services. It's a very fundamental look at service provision. And we will be, both through the financial monitoring and through regular reports on the Delivering Excellence framework, bring that back first and foremost through the Business Transformation Steering Group, but then into Council on a regular basis. So I think that given the scale of the challenge, both from an officer point of view and certainly from a member point of view as well, I think it's exceptionally important that we stay very much on top of this and are able to demonstrate that progress is continuing year by year.
Just to clarify, the table is the cumulative budget gap that if we did nothing we would face.
Yes, Chair, that by 2020 our expenditure on existing services would be £23 million more than the income that we project it would be coming in the door.
So it tends to step up by about 5 million a year, which is over 2% of our spend. Each year we have to find fresh savings. That's a level that central government and the Scottish Government have never achieved, but local authorities are expected to do that against the background of increasing longevity.
Yes, Chair, that's right. And I suppose it's worth reflecting that some councils south of the border have had to take up to 30, 35, perhaps even 40% out of their budgets. So whilst it has been and remains for some time to come a very challenging period for the council financially, in fact, there are other councils that have gone through that. And one thing we're doing, in fact, next week is sitting down with Grant Thornton to talk about some of the learning from councils south of the border to consider some of the options that the council has moving forward. And of course, we'll be bringing them back into the council for members' consideration in due course.
And the budget gap presumes or assumes that the transformation savings we've identified and reviewed at this committee will actually be delivered.
Yeah, later on the agenda we've brought forward to Audit Committee for information that the suite of financial reports that were brought to Council last week. So you have a copy of the detailed financial strategy report, and that sets out the assumptions on spend, on income, that we've made as part of developing that strategy, and also in terms of the expectations from the existing transformation programme.
Okay, and I think in our discussions, Gary, you and I were going to have an offline session on the forecasting methodology as you produce the next set of forward projections for the Council.
Yes, happy to do that. The next big event, and I drift into perhaps the other papers, but the next big event obviously is the UK Government Spending Review, which is due for publication on the 25th of November, and then we'll see the Scottish Government budget follow and have some clarity thereafter on the amount of money that local government and indeed Midlothian Council will have, and that's one if not the key issue in terms of the budget over the autumn period.
Okay, so there are key challenges to watch that deficit and monitor it for the years ahead. Thanks very much.
Good.
Councillor De Vink.
Looking at this budget gap, I have the feeling that we are in a train hurtling onto a concrete wall, because these figures are really breathtaking. I'm very relieved that they are cumulative, but they're still very substantial, and we really need to think very seriously out of the box in order to handle them And I feel that we might have good reserves, but those reserves could be wiped out if we are not going to be successful in New Bars Crescent. And it will only last until 2018-19 to be wiped out as well. So we're really facing quite a very serious situation, and we really need to do something quite drastic in order to address it. And I'm very concerned reading all this. I don't know how my fellow elected members think about it.
My own reading is that new bars would be a bonus to us if we can gain a recovery, and that there's nothing in these figures that reflect another situation, but perhaps that's not the case. Kenneth?
Well, I mean, just to say that new bars relates to the housing revenue account and not the general fund. So whatever the position on new bars, it won't relate to the balance in the general fund. But where Councillor De Vink is, of course, absolutely right, is the scale of the challenge. And I do think it's also important that in terms of the Delivering Excellence proposal, which is our approach to bridging that gap, that, you know, as I said previously, that members have a close involvement in scrutinising and helping to take that forward.
Let us move on. Financial monitoring, the paper on page 59. John, do you want to speak to this?
Yeah, just straightforward and following on from the last conversation. These are essentially 4 reports have been referred straight to Audit Committee from the Council meeting which was held last week, and what I've proposed is just invite my colleague Gary Fairley to go through each one in turn. I suggest the committee the financial strategy paper 2016-17 through to 2021 is probably the main focus, but very much in the hands of the committee. With your permission, I'll just hand across to Gary, Chair.
Gary.
Thanks, Chair. There were 4 financial related reports that went to Council last week. The first is the monitoring report for 14-15 in terms of the revenue account, and that looks at the service performance against budget on general fund services, so education, social work, commercial operations, etc. In terms of performance for the first quarter of the year, and projecting that the impact of that forward for the full financial year. And that's really just, you know, it's for Council to monitor that, but in terms of the overall remit of Audit Committee, it was important that you have sight of those papers and can consider them. I won't go into the paper in detail, but again, happy to take any questions on that. I would stress it is very much the first quarter expenditure, particularly those services which are demand-led, tend to be impacted on over the winter period, Q3. So you see the impact of weather, both on people's health and on the road network kicking in at that point. The second report, which is in the papers, is the housing revenue account. So that sets out where we expect to be for our housing programme in terms of the revenue budget. And the key issue within the revenue budget is the impact of capital expenditure, investment in existing stock, new build, and other housing assets. Related to that, Council is currently going through a consultation process with tenants and those on the housing waiting list around our rent strategy. And it's the rent strategy that then drives the headroom within the housing revenue account for investment in the asset base. Third report sets out the Council's investment plans in its other assets, so schools, roads, vehicles, etc., in terms of the general services capital plan. What I should say is all these reports, the recommendations that are set out, were agreed by Council last week. The final one that John touched on is the financial strategy. So what we've done, Council agreed its budget for the current year back in February. We've then, over the summer period, looked to project our budget forward through to 2020-21. So the report sets out some key assumptions around that. I've touched on some earlier. The key issue, if not not the single most important issue, is the level of grant support that we get from Scottish Government. It's by far the biggest line in the budget and by far the biggest unknown. And I've outlined in the earlier debate the issues around timing of that. So we expect it will be into the new calendar year before we have clarity from Scottish Government on what resources we will get for next financial year. And indeed, whether it's a one-year settlement or whether there's an indication from Scottish Government of longer-term settlements. So I suppose for Audit Committee's benefit, that makes financial planning difficult when you don't know or have got no certainty over the amount of money that you will get in terms of government support. So there is that unknown, but we need to, regardless of that, need to plan ahead based on key assumptions. And our key assumption around grant is it will remain cash flat, as in there will be no increase, no decrease, other than for new burdens or the fact that Midlothian's growing compared with other councils. The other key issue is around pay, as you'll be aware from the Chancellor of the Exchequer's July budget, the introduction of a national living wage, which in April next year would be introduced and then would rise to above £9 by 2020. Now, Council's already above, in terms of our current pay for local government staff, agreed through COSLA. We're already above the expected 2016 rate, but the longer term, moving to £9, will have longer term implications, and we made provision for that in the budget. So those are the two big cost and income issues in terms of the budget and the projections. And as Paul touched on earlier, one of the things we need to do for members in terms of further iterations of the financial strategy is just look at the risks associated with them and present some scenarios. A very small change in the assumptions around Scottish Government grant, for example, could have a material effect on that figure. But as Kenneth says, the degree of change that's required to achieve financial sustainability with that, based on the projections, is not just efficiencies. It's around reshaping services and necessarily withdrawal of some services. The financial strategy report also sets out where we expect to be with reserves, and highlights the Delivering Excellence programme that Council agreed back in June as the means to, I suppose, the means to achieve the innovation and reshaping of Council services to address the extent of the financial challenge. I appreciate, Chair, that's a very swift overview, and I'm conscious that elected members that were at Council last week have already had a chance to consider the report. So happy to take any questions on any of these reports or the overall financial position.
On the transformation programme, we obviously spend to save here. We invest sometimes in early retirements and so on. In terms of monitoring the payback on those expenditures, what's the position so far? Are we getting the required savings coming through as expected?
In terms of the overall transformation programme, or specifically? Yeah, we've highlighted in the reports the level of savings. We've been, I suppose, somewhat ambitious in some of our earlier targets, and we've not necessarily achieved the programme that was originally set out. But where we have invested resources to achieve savings, and we have through the Business Transformation Board, who's got delegated authority around Business Transformation Fund, we've got very strict criteria around payback, and there's quite a rigorous test to make sure that if we invest money in a project, a transformation project, that we do achieve that payback. So I'm comfortable that where we've made the investments, it's returned that investment, or we've got plans in place to return that investment.
Yeah, moving from the general to something very specific, the fire at Hopefield, this brings up the question of our insurance position, which we've talked about in other contexts. Are we possibly going to get some repayment from insurance? What's the situation there? Has it revealed any weakness in our systems?
No, in terms of the fire at Hopefield, we're in dialogue with the insurance company, and we anticipate settlement being reached by the end of the current calendar year.
So the signs are we were properly covered, and this will be a payout in the normal course of business.
That's the indications at this stage, and we're pushing for settlement, as I said, by the end of the calendar year, December 15.
Councillor Muirhead.
Yeah, just a general comment on the financial strategy document, in particular the budget gaps that we're facing. I do hear what Councillor De Vink says, and I think he's right, as is the Chief Executive, to point out that, irrespective of the graph that was in the Grant Thornton document, we are in a particularly good situation going forward. I have to say that, I've been a councillor since 2003, and I've seen a number of reports coming up with what I considered at the time to be quite scary budget gaps in the years ahead, and we've always seemed to have managed to muddle our way through it. I say muddle's maybe not the right way to say it, because there was an awful lot of effort went into achieving a balanced budget at the end of the day. But it's a fact that as the years go on, it becomes harder and harder to achieve these savings. If there ever was any fat, it's been trimmed away. And we're in a situation now where we're looking at real dangers to the delivery of service if we can't make the adjustments that we need to make over that piece. So it is a difficult situation that we face, and people are quite right, the Chief Executive in particular is quite right to highlight that.
Yep, I think that's the case. Thank you. Shall we move on now to the next item, the annual governance statement? Kenneth?
Yes, thank you, Chair. The Audit Committee considered the annual governance statement at its meeting on the 5th of May, and following a review of the statement by Grant Thornton, a number of additions were recommended relating to health and social care, the incident at new buyers, and also the fact of quoting the relevant act that requires the Council to undertake an annual review of the adequacy of internal controls. So you've actually already seen this updated version, of course, in the financial statements you considered earlier this morning. The changes that were made are shown in the appendix in bold. And Gary referred earlier on to the typo in relation to new buyers. I mean, I have to say it's one of the worst typos I've ever come across in my life. So I do apologise for that. Given the number of eyes that were cast over this document, that nobody picked up in that particular issue and we picked up in various other issues is unfortunate. And as I say, I apologise. That will be corrected in the final version, which will be incorporated in the financial statements to be signed off later today.
Any comments? Can we then move swiftly to the next paper, Assessment of the Council's Public Performance Reporting?
Thank you again, Chair. This relates to the assessment undertaken by Audit Scotland of the Council's public performance reporting for 2013-14. That might seem quite a bit out of date, but in fact this information has just been published for all councils, and this is a review that Audit Scotland carries out on a regular basis. And each council is evaluated on the basis of 26 criteria. And this year the council attained the necessary level in relation to 21 of these, and there were 5 areas which were identified as areas for improvement. That overall performance put the council in the top quartile of councils, and the areas where more is to be done are shown at the bottom of page 127, and the details are in the appendix, and the proposed actions in order to address the areas of shortcoming are shown in the appendix. All the public performance reporting information is of course on the council website, so members can of course look at that and come to their own views about it. I have to say, Chair, that in the final analysis I think what our customers think of the public performance reporting is probably more important than what Audit Scotland think of it, but nevertheless it's good to see that Audit Scotland feel that our performance overall is pretty good, and will endeavour to resolve these areas where there's more to be done.
So despite the challenges, there are no great surprises in this exercise. Moving on, item 11, the Audit Scotland report, borrowing treasury management in councils, which, Gary, I think you're going to talk to this document.
Yep, thanks, Chair. This is practice with Audit Committee, where Audit Scotland produce a national report. We will bring that forward to committee along with our assessment of the implications for Midlothian. So this report covered the whole issue of borrowing to fund investment, and the treasury management activity associated with that. Section 2.2 sets out the objectives of the report, and 2.3 just how the report from Audit Scotland is structured. So setting the scene, demonstrating the affordability and sustainability of borrowing in councils, and the effective management and scrutiny arrangements. Section 2.4 sets out the key findings in terms of the national position, in terms of the level of debt, reiterating borrowing as a key source of finance for investment in council assets, the principles, the treasury management, and areas for improvement. I suppose I would swiftly sort of move on to section 3, which sets out the Midlothian position. We've highlighted there the level of our borrowing. We had at the 31st of March borrowing of £226 million against a total asset base of some £650 million at that point. Borrowing has increased over the last 10 years, but members will recognise we've invested quite heavily in our asset base, whether housing or schools, over that period. So that should be no surprise. We do have forward-looking plans, and those were touched on earlier in the agenda. How general fund, we've now projected our investment in general fund assets through to 2020. And for some time we've had housing revenue account plans that look much further forward, and in fact we tend to project out the implications for housing revenue account over 20 to 30 years, recognising the longer term nature of those assets. We continue to use different methods to finance assets. We have traditional borrowing through PWLB, we have historic PPP, PFI schemes, and we continue to look at other means to finance our asset base. So really today it's really just for members to note the national report and its recommendations, to note that how we report on treasury management continues to be reviewed, and I suppose for Audit Committee to consider how it might want to further scrutinise treasury management, if any support would be required by committee members to achieve that.
Thank you, Barry. I mean, we previously reviewed the performance of Midlothian in treasury management, which appears to me to be on the best side of the top quartile in terms of Scottish local authorities. The things that interested me in this report was the concept on page 24 that when a council starts to spend more, it should express its actions to the public in a notional impact on council tax, or if, for example, it was a housing matter, we built several thousand more houses, we should explain the impact in terms of this will cause an increase of rents of X. Now, to some extent, we do these calculations, but I'm just wondering whether we're missing a trick compared to other local authorities. An example would be the new Paradise and Roslin hub projects, where we know that increases our deficit by about 700,000 a year. We've never expressed it in a number that perhaps the public could comprehend.
As I've talked to you before, Chair, there is a danger in looking at one element of the budget in isolation, but what the Prudential Code and which is one element of the regulation around borrowing. What it requires us to do is, as a council, is when you're setting the budget and setting rent, is to consider the prudential indicators. That includes the level of income from council tax and from the budget that is required to fund borrowing, so that members, and therefore members of the public, can have an understanding of the impact of the investment decisions on revenue budget. I suppose it is a bit like just any household budget. If you have a very large mortgage, then much more of your weekly income or monthly income will go on that mortgage, which then restricts the amount that you can spend on other things. So we continually monitor that level of budget. But as a growing council, we see we have measures in place to manage the amount of the revenue budget that's required to fund their investment. And indeed, councils agreed a capital strategy that puts a cap on the overall borrowing for assets, to make sure that we do not create a burden for future years and future council administration in terms of the burdening of financing the investment in the asset base.
Councillor Muirhead.
Chair, you mentioned there going out and communicating with the public, the impact of the decisions that we make on investments, and you mentioned housing in particular. I've got to say that that's one area I think that we've done pretty well on in terms of going to the public first, going to the rent payer in particular, who at the end of the day was the rent payers in Midlothian that financed the house building projects in Midlothian, no the council taxpayer, and consulting them in terms of what the impact on our investment would have on them in terms of increased rents, and getting their agreement indeed to go ahead with that. So I think there's a fair record in the council of actually doing what you've said, certainly in terms of the housing side of things.
Yes, I agree very much that it's been always explicit that to build these new council houses would mean an increase in rents in the historic stock. I think this paper goes further and says that there should be some sort of concept of a notional increase in council tax relative to incremental spending where we were to do it. But as the paper also points out, the difficulty is in an environment where we have council tax freezes. This is entirely hypothetical at the moment. So therefore, spending decisions are only really digested at the level Gary's discussed, at the meta level where we look at the total borrowing headroom of the council and the total resources, rather than looking at any idea of the individual cost-benefit impact on each ratepayer in Midlothian. So it's an interesting concept, but while we have a freeze in council tax, I suspect it's going to be kind of stillborn. Let us move on. The internal audit papers, construction industry scheme, internal audit. Speak forth.
The construction industry scheme is a scheme where the council deducts tax from payments made to certain construction industry subcontractors and pays it over to HM Revenue and Customs. The tax is calculated on the labour element of invoices received. This audit was undertaken following an inspection by HMRC and the imposition of a penalty on the council. HMRC suspended the penalty subject to 3 conditions: that we meet the notification and filing obligations, that procedures are put in place to check invoices more thoroughly, and that we have an annual internal audit review. The audit tested the verification of subcontractors and that the tax deduction was calculated accurately. The checking of invoices to ensure that the split of materials and labours was reasonable or challenged if not, and the returns made to the HMRC. Following the audit field work, we made 3 recommendations: that annual training is provided to authorising managers, that authorising managers should have up-to-date lists of net subcontractors those to which deductions apply, and that the purchase ledger report should be reordered to allow a more efficient completion of the HMRC web form. The Audit Committee is asked to note the report and endorse these recommendations.
Heather, thank you very much for that. So we've been on the naughty step with HMRC. Did we not realise we were running a risk in this area? How did we get into the position of offending another great entity in the state apparatus? Gary?
I wouldn't necessarily use the language you've used there, Chair. Construction industry tax is, and the whole area is very complex and difficult at times. The very nature that, or the very fact that HMRC have such a scheme in place is to ensure that it can secure its tax revenues from the construction trade and to avoid money disappearing, so to speak. We've identified, I think, through HMRC do regular audits themselves of the operation of the scheme, and they picked up some areas where we needed to improve. We've done that, as Heather highlighted. We have not incurred a financial penalty in that respect, and the audit really is for me, it's more about just housekeeping, making sure we are absolutely on top of it. And the key issue I think that comes through is just training for our managers, our frontline managers and staff who are dealing with contractors' invoices day in, day out, to make sure they're really up to speed with the sometimes quite complex regulations, and helping them ensure that they're following steps. So it's less about being on the naughty steps, more just about how we do even better to make sure we're complying with the legislation.
So this is really a quite unusual part of the invoicing process, that the construction entity will produce an invoice with a mixture of labour and materials, and we are obliged, as the one who's going to pay the bill, to actually question whether that balance is correct. That's the obligation. That's probably why it fell outside our normal process.
We need to question that where there's a requirement to perhaps deduct tax. Yeah.
Okay, so we shouldn't expect this to be a recurring item at Audit Committee, having taken these steps?
We are required to audit it annually by the HMRC. We don't expect, these issues that we discovered are minor issues. Training has been given to managers. It's just a repetitive process so that we catch any new managers coming in to deal with these areas, to keep knowledge up to date.
So having tightened it, there's probably no need for the Audit Committee to revisit this question in a year's time. We're obliged to consider it.
At the moment, I think we're obliged to, so we would have
so we will see this
approach
again. It'll be put in the schedule, right?
Authorities.
Okay, we have an item to be considered.